Wall Street completed the worst August in the last 7 years. The market opened the autumn on the same pessimistic note. Let's discuss crucial events in the world of finance and their impact on the US stock market. Global investors express extreme risk aversion. All attempts of the market to recover are terminated by fresh economic metrics and aggressive comments by Fed's policymakers. The benchmark stock indexes extended their losses. The Dow Jones shed 0.88%, the Nasdaq lost 0.88%, and the S&P sank 0.78% to close at 3,955 points. The pre-market today promises further sell-offs. Futures on the major stock indexes are trading in the red. The equity market lacks fundamental support, and the S&P 500 is expected to trade in the corridor between 3,820 and 3,940 points today. Wall Street indexes have been falling the fourth session straight. All sectors in the S&P 500, except one, have incurred losses. The energy sector tumbled in parallel with the oil market. Yesterday, a speech by Loretta Mester, a voting member of the rate-setting committee, added to the overall pessimism. She said that the central bank has to raise the funds rate over 4% by the beginning of 2023 and has to put it on a hold for the whole year. She also warned about mounting recession risks for the upcoming year of 2 years. Under such gloomy prospects, the stock market is doomed to failure. Even the ADP employment report did not improve the situation. According to the ADP payroll processor, the US private sector created 132,000 jobs, much weaker than 200,000 in the consensus. This indicates that the labor market is cooling down. Besides, international rating agencies released their warnings about the slowdown in the global economy. Moody's downgraded its forecast for the GDP of 20 major economies to 2.5% from 3.1% previously. Fitch confessed that the Eurozone is clearly slipping into recession. In this context, Wall Street indexes finished August with the worst result in the last 7 years. The Dow Jones tumbled 4%, the S&P 500 plummeted 4.2%, and the Nasdaq lost 4.6% for the month. The number of initial unemployment claims decreased by 5,000 to 232,000 last week against 237,000 a week ago. The reading is way below the market consensus of 248,000. It's the lowest level of the first-time claims for unemployment benefits since the week ended on June 25. So the labor market remains tight even under the economic slowdown. Market participants are alert to the US non-farm payrolls, which are due on a Friday. Stock investors could be discouraged again by robust employment growth because it will convince the US Fed to continue its aggressive tightening. The US economy is expected to add 293,000 jobs in August, following the unexpectedly strong growth of 528,000 in July. The technology sector is going through a challenge today. Chips manufacturers are again under the spotlight. Washington ordered Nvidia to terminate exports of particular chips to China. Such announcements signal that the White House is stepping up pressure on China's technological power amid tensions in Taiwan, where chips for Nvidia and other large consumers are produced. Nvidia shares slid 6.6% in the pre-market. Shares of its competitor, Advanced Micro Devices, sank 3.7%. And China's foreign ministry has accused the United States of trying to impose a technological blockage of China, while the Commerce Ministry said such auction would undermine the stability of global supply chains. Fed's policymaker Raphael Bostic is due to speak tonight. Meanwhile, the US dollar has eventually gained bullish momentum. The index is on a path to new highs, trading at 109.30 at the moment of recording this video. The intraday candle for the index is defined between 108.90 and 109.50. The safe haven US dollar has hit a 24-year high against the yen. The euro and the pound sterling have weakened by 0.6% and 0.2% respectively. The sterling has dropped to the lowest level since the pandemic outbreak. The euro has dipped below the parity level. Soaring inflation, food and energy crisis, and the COVID resurgence in China play havoc with the global economy, and the US dollar is the winner. The greenback is also holding the upper hand in the United States and Canadian dollar pair. The currency pair is trading higher today within an intraday corridor between 1.3110 and 1.3990. Escalating political and economic jitters worldwide lure investors to flock to safe haven assets. The loonie finds it hard to show resilience to its American peer. Meanwhile, oil prices are extending their slide. A high-tech hub in South China tightened COVID restrictions. Such measures increased concern that high inflation and rate hikes would dent energy demand. The White House announced that the G7 finance ministers would discuss Washington's offer about the price caps on Russian oil at the summit on Friday. For the time being, Brent crude futures shed 2.07% to trade at $93.63 a barrel, and WTI futures slipped to 1.9%. Bitcoin managed to settle above $20,000 yesterday. However, it's losing confidence today. The token has dipped below the landmark level a few times, but support is still strong. Bearing in mind Bitcoin's correlation with the Nasdaq and the S&P500, the outlook for the flagship crypto is negative. Nevertheless, the token has never been hit by massive selling in the last few days. The intraday corridor for Bitcoin is between 19,500 and 20,500. The escape beyond any of the borders will determine a further trajectory. Despite the lack of catalysts for optimism, there are always trading instruments that will multiply your gains. Trade with the profits and see you online tomorrow.